And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld, taking you through to that closing bell. It's a global simulcast. Carol Massar and Tim Stenovec join us right now. Welcome to our audiences across all of our Bloomberg platforms.
She's back!
Television, radio, our partnership with you two. Yes, I'm back. Thank you, Carol Massar. I appreciate you loving
back
me.
From
you mean Katie Greifeld.
Oh, okay.
Okay.
Thrilled to be here. You know, it feels like I missed a lot.
You did. There's always a lot going on. I'm sorry, Romaine. Did I interrupt you?
No.
Talk about these markets, you know, they're so kooky.
Listen, even when you look at something like the VIX that has been up a bunch, down a bunch, I mean, the volatility that we see, we just swing from headline to headline, it seems like.
Looking at the choppy day oil had and maybe the buying that we saw in the equity market had to do with the decline in oil prices late in the day after I don't know, what ended up happening with Russian oil and the U.S. easing sanctions there and allowing that to be sold.
It's unsanctioned now.
Yeah, there you go. This is what I missed, these $20 swings in the price of Brent. We were just talking about this with Dan Suzuki, though. I am fascinated by what's going on with gold, because even if you, as you saw these intraday reversals in stocks and bonds and oil, you didn't see it in gold. Gold's still down more than 3% on the day, nearly 4%.
Yeah, absolutely. And maybe that's the inflation question here. And we talk about yesterday, too. We talk about the AI story. We broke this on air yesterday with Micron earnings, just a phenomenal quarter. But those shares have been under pressure all day long. As I guess a lot of people just saying, like, have we kind of reached maybe the peak, at least for some of those names? We get the closing bells here in New York. We opened lower, and at one point on the day, all of the major indices were down, basically about 1% or more. But as you can see on your screen, there has been a big turnaround. Some comments from President Trump, some comments from the Treasury Secretary, some comments from Benjamin Netanyahu, seeming to provide some optimism here that maybe, potentially, the U.S. and Israel can get things under control in the Strait of Hormuz.
Yeah.
The Dow Jones Industrial Average lower by 200 points or 0.4%. The S&P closing lower by 18 points or 0.25%. The Nasdaq down about 0.3%, Carol, and the Russell 2000 higher by 0.6%.
All right, forgive me, I jumped the gun there. Hey, S&P 500, let's go to it. Kind of an even split, but you did have a little bit more of a negative tone here. 291 names in the S&P 500, Katie, lower on the day, 212 to the upside.
Let's take a look at the circle, what these sectors did on this day. You can see that information technology is green, but really that is exactly unchanged. So a bit of a misrepresentation there. In terms of what did perform today, energy higher by 1.5%, even though you saw Brent really reverse its gains. Financials also pretty much unchanged on the day, but the color is green. Then you take a look at the other side of the list. Materials leading losses today, down about 1.6%. Consumer discretionary and consumer staples both off as well, Carol.
All right, guys, let's get to some of the individual gainers. I'm just going to go right to the energy patch because we definitely did see them dominating in the S&P 500, understandably so, with the moves that we've seen in energy markets. Still a lot of concerns. But what's interesting to play was a lot more of the oil field services and equipment companies. These are the companies that I think it's safe to say I never saw like kind of a clear headline on any of this, but this idea that you think about what's going to be needed to be rebuilt perhaps in the Middle East, what might be being built out here in the United States as we think about energy security. So you had Baker Hughes, an oil field services and equipment company. That one was up about 5.6% in today's session, top in the S&P. Apache, an E&P company, up almost 4% in today's session. And then SLB, formerly Schlumberger, also an oil field services and equipment company, that too a gain of about 5.5%. So we did see some outperformance there. Keep in mind, Baker Hughes is up something like 30% year to date. Apache, we've seen analysts on the street raising targets on that company. That stock's up about 56% year to date. And then for something completely different, let's go to Signet, SIG. Of course, the jewelry retailer. This one outperforming too, up about almost 14% in today's session. Company's fourth quarter adjusted earnings per share beat consensus, and its full year forecast was viewed as good enough by Citigroup. And so you definitely saw some outperformance in today's trade in what was a down market.
All right, that was the outperformance. What about the underperformance? Let's start with Micron, ticker MU. Shares of Micron fell today. The company did warn that it's going to need to spend quite a bit of money when it comes to production to meet demand, $25 billion for CapEx this year. Analysts wanted to see about $22.4 billion. That does, though, reflect the high cost of keeping up with demand for those memory chips, especially high bandwidth components used in AI computing. Once again, Micron shares falling today by 3.8%. Also, let's look at Fannie and Freddie today. Shares of Fannie and Freddie have plunged to their lowest levels. Oh, no.
What?
Wow.
You know what? Sometimes this happens. What can I tell you? Fannie ended up finishing the day higher by 5.4% and Freddie higher by 8.6%.
They were down a lot.
Oh,
though.
yeah. I mean, look, the big picture is investors are casting doubt on the Trump administration's efforts to sell more stock in the mortgage finance giants to the public. Shares have been on a steep decline since mid-September, shortly after optimism peaked that a public offering for the agencies could come in 2025.
To be fair, I
let's see how Boston Scientific
they were down a
ended
lot.
the day.
They were down 22%.
They were.
Fannie.
Yeah.
You pulled a Carol, Tim.
I'm changing the subject here, guys. Let's go to Boston
that hurts,
Scientific.
Romaine.
All right. That's a really weird one. I'm going to have to get to the bottom of that in a few minutes. Anyway, shares of Boston Scientific, they fell as much as 3.1% earlier in the session. They closed down about 2%. This after the New York Times reported that the FDA found issues with the firm's pacemaker battery. This was last spring. Inspectors from the FDA found that a pacemaker battery made more recently had also failed. That's according to a report that has not previously been made public, according to the New York Times.
Let's check in on yields here because we had a wild day in that space as well. We started the day with the sell-off, a resumption of that sell-off in treasuries. At some point, that turned into buying. But the net effect of it all, your two-year yield is going to end the day higher on the day by 3 basis points, creeping back up to 3.8 as it basically everyone is pricing out any chance of a Fed rate cut this year. Although in the longer end of the curve, a different bit of the story there where you saw yields fall on the 30-year down about 4 basis points.
All right, guys, when we're not talking about the war, when we're not talking about the AI spend, we're talking a lot about prediction markets. And an interesting story on the Bloomberg, it talks about Point72, Belliosny Asset Management banning employees from trading on prediction markets in their personal accounts. That's according to people familiar with the matter.
It's driven by compliance limitations. So this is according to one of the people familiar with the situation. Because these prediction markets are regulated by the CFTC, activity can be treated as derivatives trading. It triggers tracking and reporting obligations, but the exchanges generally lack the infrastructure to provide reliable electronic records that the financial firms need, which makes monitoring difficult and raises non-compliance risks. So it raises the question that if these firms could then provide that sort of infrastructure or paper trail,
Right.
would these firms would the asset managers then allow their employees to participate?
Well, it kind of reminds me of what we saw with crypto a couple of years ago. You know, when you have a new emerging asset class or whatever you want to call it, you see these sort of headlines as firms try to catch up. And it's not just banks either. You know, I'm sure it's news companies as well. When you see something like prediction markets emerge, which you can bet on and win or lose a lot of money, that these disclosures, they tend to come on a little bit of a delay.
All right, we are getting some earnings here. FedEx crossing the wire right now. The big freight shipper reporting earnings for its fiscal third quarter. Adjusted EPS does look like a beat, $5.25 a share. The street was looking for $4.17, so that's a huge beat. Revenue grew 8.1% in the quarter to $24 billion. That's roughly in line with what the street was looking for overall. The FedEx Express unit, once again, the star of the show, up about 10%. The freight business, though, was down about 4.7% and is slightly missed estimates at $1.99 billion. But here's your forecast. The company says that for the full year, and we are in the final quarter of that fiscal year for them, $19.30 to $20.10 a share. That's well above what the street was looking for. The previous range had been $17.80 to $19, and the street on average was looking for $18.71.
Looking for some color in the commentary from Raj Subramanian, the FedEx president and CEO. Nothing that is really surprising to many people, talking about how he delivered another quarter of strong financial results, excellent service for customers. He calls the company the industrial network that powers the global economy. The strategy strengthens our operations, but also drives robust free cash flow, positioning FedEx to deliver durable long-term value for stockholders. I guess what I'm most interested in is this being sort of a barometer for the U.S. and global economy. and what the company is seeing when it comes to demand for its products and services.
Yeah, kind of interesting. I mean, as we said, the company raising its guidance, but I just did a quick search in the press release for the word war, and I didn't see anything. I mean, this, is one of the shippers, Katie, that's shipping all around the world. So it is a great barometer on the war. So we'll see if we get any commentary, certainly on the call with analysts.
Absolutely. Have to imagine that's top of mind. I will say for the fiscal third quarter, that ran through February 28th. So the day before the war broke out. So when it comes to a lot of these figures, when it comes to the guidance, have to imagine that what the war means for fuel costs, for demand, hot topics coming up later today.
All right, looking forward to that. That stock up about 2% here in the aftermarket, and that's after having a pretty good run so far already in 2026. I think it's up more than 20% here year to date.